Well, hi, everybody, and welcome to the Middle Class Investor this week. This is Seth Martin, your host. Well, I've got the S&P 500 up here from last week, and as you can see, it was a down week. It was actually, we're going to zoom in here because it was actually pretty negative down week, and this counter trend rally that we've been having could very well be over, maybe with one more up move, but you can see the market, it opened here. Opened right here. It ran all the way up here during the week and then turned around and finished actually down here, right here. This is a pretty bearish sign. Usually this type of candle formation, we'll wait and see what happens this coming week, but this type of candle formation in conjunction with the next one could be an extremely bearish looking situation. I mean, if you get something like this where we follow through to the downside this week, could have this whole wave 2 could be over and we could be going down. In fact, last week I was talking about wave 2 being over, and this is probably the first move down after that wave 2. In other words, wave 2 probably ended here. So anyway, we could actually have this could be kind of an A, and then a B, and then a C. So we could have come close this gap right here. There's a gap, and then resume the selling. So I don't know if we're going to get more selling this week, or maybe early in the week we get a little rally and then we turn around and sell off. It could be something like that. But by the way, these are daily candles. Let's turn it to a weekly. That probably. So I told you about the week, and I was actually talking about a day, but you can see the week here was down also. But those daily candles, you can see for the most part the week we were kind of chopping sideways, but then ran up and then totally sold off, and so that's fairly bearish. So, all right, let me get my other stuff up here. Let's look at volatility. Let's get back on the weekly. So volatility for the week was up, as you might expect. If the market was down, you could expect volatility could start turning a corner and turning up, and you can see here on the MACD it's starting to turn as well. So like I said, that may be it for the whole counter trend rally, and we should start seeing a lot more selling, which kind of works for the bond market too. I mean, the yield could pull back pretty substantially. It's already started doing that. Let's zoom in a little here. Look at the yields. Like I said, this could have more to go, probably down in here to this decision point area that we drew, maybe around 2.5% or 2.6%, before really taking off. And this really taking off could coincide with the market selling off. That's kind of what I'm looking for. I'm going a little bit fast tonight because it's late. Got a late start. I was driving back from Dallas, and so hope you don't mind. Let's look at the real short-term treasury. Let me turn these turn the studies off here real quick, so we don't need this study on there. We don't need no stinking studies. All right. Sorry about that. All right. So you can see here, trend still pretty up. We got a little sideways. I don't know if you can see that or not, but we got a little sideways consolidation happening here. Right here, between here and here. And I suspect this will resume. Now we might pull down below this and then turn around and go up. So But the Fed is not done raising rates. There's a lot of speculation, obviously, as to what the Fed's going to do. And, you know, I've been pretty loud on here that the Fed doesn't really matter. Of course, they can cause some. They can cause traders to do things for a week or two, or maybe even a month. But the forces at play here are so much larger. The markets, nobody's bigger than the market, including the Fed. I guess that's maybe the easiest way to say that. So let's switch over to the other charts and look at, I think one of the most interesting areas is gold and silver. You can see here we're pulling back now. The ES, this is the overnight futures, and they're showing down 125, down 150. So we might open lower, we might not. As long as we don't open below this 2691 area. Sometimes, well, let me put this week. Let's look at this for just a second. So let's say we open right here. And then rallied up a little higher. That could be kind of a little wave two in here. So the times that you can really tell what's going to happen is if the market were to gap. Let me put it on a daily. Excuse me. Put it on a daily chart real quick, and I'll show you what I'm talking about. So I'm kind of hinting around it, but let's say the market opened up down here somewhere below this candle, below this green candle. That's called an outside gap. In this case, in the direction down. And usually, once you get that, even if it comes up and closes the gap, it usually just keeps on going. So throughout the day. So look for that tomorrow. That could happen. We could just go down a little bit and then rally up here to a new high where this is kind of a more pronounced ABC up into this moving average here, and then roll over down. But I think the bears are firmly in control. You could see some pretty sharp rallies here and there, but I think the bears are firmly in control, and I would be very, very, very careful about being long this market in your 401k. But it's your money; you get to decide. So, but I think you deciding is better than somebody else deciding, because nobody cares more about your money than you do. So we've talked all about that before. All right, this is gold. You can see gold is pulling back. Now, the commitment of traders data is very, very, very bearish on gold. So we should have some sort of, this should be ending soon. Now, it may end just below here somewhere. In fact, let's put a little line there just to test ourselves. Let's say we get a close below that pivot somewhere down in here around 1227, 1225, and then we should get a very, very strong rally that would last several months probably in gold, and probably take out this old 1377 high. So again, this looks like another great opportunity to buy gold. I'm going to switch this to a different. Keeps jumping around, and I don't like the way it's jumping around. So we're going to pull back into here, and then this could play out here where we get way up here into the 1500 area to finish this whole counter trend move. Okay, silver's doing something a little bit different. Silver's B is kind of a sideways pattern, and then it's likely to. It could drop lower and then go up and make this C, but really silver, it needs to get up closer to $30, I think, before it's time for it to really sell off and go take out this low. The euro and the US dollar. The euro has had a fairly strong pullback. It's getting close to the end of that, but there could be kind of a small triangle happening in here with a little close lower, and then we should get a strong counter trend rally back up here into this 1.2 area. And then I think it's you look to short the euro again, but I think short term to intermediate term, the euro is going to be a little bit more bullish, unless it's in, like I said, unless it's in a triangle, which could very well be. To see that, you got to look more at, like I say, maybe a 4-hour chart, and you can see here this. So far, this is, if this is an A, a B, a C, D would finish somewhere down here, and then E, and then a close lower below this low, and then a really strong rally after that. So let's just keep a close eye out for the triangle. Let me put some lines in here to make it easier to see. We're talking about a triangle that looks like this. Like so, and we could be talking about, let's say, this pulling into this area here. So down into here, and then a little E, and then a new lower low. Okay. All right. Moving right along. US dollar CAD. I think if you focus on the US dollar, this should move in the same direction as the US dollar. So we could get a pretty significant pullback, maybe into this area, and then rally significantly on the US dollar, Canadian dollar. That's really all I want to look at. Let's go back to the S&P 500 real quick, because I think we can just wrap up there. If I can find where, there's the Dow. The Dow's a little weaker. Let's look at the Dow since I'm on here. I think that'll be fine. Again, we could get some sort of little counter trend rally. This move down here could be just about complete. I mean, it went down, 2 weeks in a row, and we're working on 3 weeks in a row down. That's pretty substantial. Now, I think we missed that record. They were talking about 13 days in a row or something like that down. You can see this long string of down days, and then I think it was ended right here. This one right here ended that little down streak, but then you can see it quickly got back underway. So clearly, in my mind, we're in a different type of environment in the market. So again, we might see a little counter trend rally up into possibly, could go as high as this up here to 24,850, and then turn around and roll over. So any of these bounces, you should be, in my opinion, you should be using these to get out of your 401k position, stand on the sidelines. I've got some long puts in that are pretty they're pretty risky, I guess you could say, but I'm expecting the let's look at the SPY, because they're actually SPY puts. So just to get the right information, I'm looking for this to run all the way down into this area around, below 180, somewhere below 180 by September. So I've got like 30 something puts on that. So if it doesn't work out, then I'll lose some money, but if it works out, I'll make a lot of money. So that's the name of the game. Risk a little, make a lot. All right, everybody, that is it for this week. I would look for this to continue to go lower. Look for maybe a quick rally in the dollar, followed by some more sell-off, and then we're going to see a lot of wave threes in a lot of different markets. So the selling or the buying, depending on what market you're looking at. Equity markets are going to be selling, but if you're looking at currency markets, you could see some serious buying going on, depending on which currency market you're looking at, as the U.S. dollar turns and starts to go higher. All right, everybody, that is it for this week. Thanks for coming in, and look forward to talking to you next week. Bye-bye.